What's up, everybody? Trade Runner here, and welcome to another trading analytics video. So today we saw the semis take a pretty big hit right after market open. We saw a little pop out the gates, but the rest of the Mag 7 definitely picked up the slack, spearheaded by a particular technology / vehicle company who has been seeing a lot of positive news recently. But before we get into that, if you guys haven't already, like, comment, and subscribe to the channel. If you guys enjoy this type of content, it really helps us out. Now, let's get back to the video. And as you can see here on my screen, we're taking a glance at Tesla. And Tesla, again, has been in the news recently. We had its earnings last week. Wasn't really the greatest earnings of all time, but we saw some bids pick up right there at a key support zone at 215. And you see what happened. The Bulls knew they had to defend this 215 zone, or else we're going to look to close this gap down to 205. And then from 205, we probably would have looked to see 192. But because both heavily defended, as evidenced by this nice triple bottom here on the ticker, we were able to get a nice consolidation to the upside today, right? So looking at the hourly chart, you see we got a nice little bull flag consolidation here, ended there about 232. And it's pretty important for us that we held that level, because it puts us in a situation where, if you jump over here to the 4-hour time frame, you'll see exactly what I'm talking about, that a gap fill to this target area is pretty likely, right? So we look like, because we got this consolidation here, 245 is very much in the cards to close this gap on Tesla. Now, what does that mean for investors? Does that mean we're going to go straight line? Not necessarily, but as we all know, with Tesla, whenever it gets a move that is pretty predicated on the charts from a key support area, then the move happens relatively quickly. So I do think that we could see 245 by the end of the week, as long as we hold this level, right? We don't lose 227. And if we can get a candle close above 234, 245 is in the cards, right? But we need to handle that 234 zone with some volume, right, to ensure that we get that candle close over there. And all in all, what that does, it puts us in a good spot for relatively lower risk entries on Tesla, meaning that if you want to look at calls, you could probably take this as the risk level at 227. Ideally, I would wait until we get a candle close above 232, 234, specifically above this line, to ensure that you're taking the lowest risk entry possible. And then that way you can use 234 as a risk level once the candle closes above that for the ride at 245. So that's what I'm eyeing on Tesla. Want to make that pretty quick. I know I did a pretty in-depth look into the ticker last week, so I wanted to just give a quick update on Tesla, what I think is going to likely happen there. Now let's jump over here to the overall market, SPY. So, of course, we all know we have some major catalysts on Wednesday, or actually technically we're going to consider Tuesday. Starting tomorrow and Wednesday, we have FOMC, right? We get the Fed decision on Wednesday, and then we have Powell's speech at 2 p.m. on Wednesday as well. So I think that's the day that most investors are kind of waiting on to see how the overall market is going to handle the news of the expected announcement of rate cuts being confirmed for September. Now, I say expected because we want to take that with a grain of salt, because these are rate cuts that we should have been on our third by now, because the first wave that we got quote unquote confirmation of earlier this year should have happened in March, right? And data has changed all of those expectations, but the thought that we are getting rate cuts led to a huge rally in the market. So I think the confirmation that we will get those, assuming Powell comes out and is as dovish as he's been the last 2 times he spoke to the public, it puts us in a pretty good spot to coincide with a nice little push up here on SPY, right? Now, looking at the overall trend line on the ticker, you see here in the 4-hour that we had a nice little trend line bounce from the lows of 537 last week, got that consolidation, and we got a key close above 544. Now, us being above 544 puts us in a good spot, because that likely puts this target gap fill area at 553 within range. Just to kind of reclaim some of the losses that we've taken in the overall market since the sell-off happened last week, when Tesla and Google's earnings reported as pretty, mediocre to bad, right? So that is what I'm looking at for SPY. I think how we handle 547, which has historically been a pretty decent resistance zone for the ticker, will determine if we get that breakout to 553. So Pretty similar chart to Tesla in the fact that we're getting a bounce off of a key area of support to put us on track to close the gap to the upside. The one thing that I want to keep everybody wary of with SPY is that we actually do still have a gap to the downside that we have not officially closed 100%. We got about 60 to 70 cents away from closing the gap on Friday, but because we never got that gap fill, it's very, very important for us to know that the market makers and the overall retail and institutional investors know that. And from a pure psych level perspective, there is a chance that we could reject from 547 to send us all the way back down here to retest this, not to retest the trend, below the trend line at that point to close this gap before we get a bounce from that key support of 537 even. Okay, so keep that in mind with SPY, something I'm keeping an eye on as well. I think that the safer bet for the short term would be the push to the upside on the gap fill in anticipation of Powell speaking on Wednesday. And then after he speaks on Wednesday, or while he speaks on Wednesday, all bets are off because he could say, hey, rate cuts, I would ideally want to do September, but we're looking like, first quarter of 2025, and they can just send the entire market to a tizzy. But we'll see what he says. So a lot of that heavily depends on what Powell's going to say. But I do think in the short term, we're going to get that push up to 547 at least, which a close above 547 puts 553 in a pretty good spot. But we got 2 days till Powell, so don't want to make any certainties. Of course, there's no certainties in the market, but just kind of play that by ear and keep yourself safe. And then the last ticker I'm going to jump over today, guys, going rapid fire today, is we're taking a look at Google. Now, this, for those of you guys who know, been around the channel or in our Discord server for a long period of time, you guys know that Google is one of my favorite tickers to play, right? So earlier, a couple weeks ago, I called the head and shoulders pattern playing out to close this all the way down to 165. We didn't quite get all the way filled at 165, right? We ended up getting to 165.89, and I had us going down about 45 to 60 cents lower to fully close that gap. So it's in a similar situation to SPY where we never got that full gap close on Google, which puts us in an interesting spot to see that we could look to retest the close the gap and push above after we do that. However, going back to the 4-hour and the hourly timeframes, you can see that Google actually had a nice bit of a retracement from the lows earlier today around 169, and we were able to consolidate and push back upwards to 172, right? The mid 172s. And the fact that we kind of close above 170 shows that there's still some strong support there. And this line, if this line holds, then we can look to push upwards in a new inverted head and shoulders pattern to send us back up here to 175. We took some Google calls in our server as well, and those ended up returning about 50%, 45, 50% so far. Nice bit of return on a day trade that we took earlier. So I do think that we get that push to the upside on Google, but it's in similar situation to SPY that we never got that full gap close. And I think that there is still a chance, should we reject and 170 fail as a support, to bring us back down to 167. That will take us down to 165 to fully close before any reversals from there. And that also puts us in the daily oversold territory on Google, and that's another story. But that's all I got for you guys today. I've been Trade Runner. This is Trading Analytics. Link to our Discord is in the channel bio as well as in the description of this video. And we'll see you guys in the next one. Thanks for watching.